everybody, welcome back to the Jack Chapple Show. So how high can Bitcoin go? We're going to be talking about that today along with the stock market news as a whole today. We're going to be talking about Tesla Model 3 production, oil prices, big retail news, Microsoft news, our stock market winners and losers, and a bunch more. So the very first thing I want to talk about today before we get to the Bitcoin is actually how the stock market did as a whole, what the sectors were like, and so on. So big news today was that the market as a whole was pretty good today. Pretty good in pretty much every single sector. We were up today, apart from technology and utilities. So funny enough is that all of the giant companies, all the giant tech companies, Google, Facebook, Amazon, all the big tech companies were pretty down today, like substantially. So we're going to get to that near the end. But they were down today. Everything else was up. We're talking energy was up, oil was up, financials were way up, materials were up. So all in all, it was a pretty good day unless you're a tech investor, which is the kind of trend we've been seeing over the last 3 or so weeks. So I just wanted to get that out of the way. And the other thing I want to talk about was Dow Jones. Congratulations, Dow Jones. You hit an all-time high. You hit an all-time high today. Even though it closed out at 21,479 points, it hit an all-time high today of 21,544. All-time high. Congratulations, anyone that is investing in the Dow Jones as a whole. So Dow Jones was up 0.61% today, so that was good news. S&P 500 was up 0.23%, and NASDAQ was down like just under 1% today because of the tech drop. So just wanted to get that out of the way. Now let's talk a little bit about Bitcoin. So why am I talking about Bitcoin today? It's because Goldman Sachs, a bunch of analysts from Goldman Sachs, came out and said they are very bullish on Bitcoin. They're investing in it right now. They put in a bunch of calls towards it, and so they're big buyers. They are big buyers. So Bitcoin, for those of you that don't remember, I think about a week ago, it was at 1 or 2 weeks ago, I think it was somewhere around $3,100. Now, as of today, it's about $2,589. So it's had a pretty big drop in the past couple weeks. But I think that's one of the reasons why Goldman Sachs is really bullish on it. They actually said today that they expect it to go up to $3,915 potentially, and at least $3,100 in the next few months, is what they said. I'm going to link an article down below if you guys want to check it out, but they're so bullish on it, so I want to give you guys my opinions on it. So they expect a 52% gain by the end of the year. 52% gain for Bitcoin by the end of the year, which would be a great investment, obviously. 52% in 6 months is absolutely ridiculous. So what are my thoughts on this? What's my opinion on it? Well, no, I'm going to read a little bit of this article here, and I'll give you my opinion. So it says that directly from this article, the Goldman reports illustrate how mainstream Wall Street is paying much closer attention to Bitcoin despite high volatility and lack of regulation in the digital currency world. This week, Bitcoin and the blockchain technology behind it made the cover of a well-respected investing magazine, Barron's. So the article talks about how, all these big banks, they're just starting to take Bitcoin seriously right now. They're just starting to take it seriously right now, and so are casual investors like a lot of you watching this. You all are starting to take it seriously this year. In the past 6 months, it's probably come into your eye and come into your mind, even though it's been around for a few years now. And so this is a little bit worrisome to me, and it could be a good thing. So I have a two-sided opinion to this. You can take it with a grain of salt. So right now I see Bitcoin as more of a commodity. I've said that a bunch. It's more of a commodity like gold, silver, whatever. Why is this? It's because if you were to buy Bitcoin as a currency, where can you use it? There's maybe a couple thousand stores in the world that actually use it. You cannot go to your local Dairy Queen or McDonald's or ice cream shop or vendor or whatever, and they won't accept Bitcoin. Now, there are a few big vendors that actually do. I think there's a few online companies that actually do accept Bitcoin. I think that, wasn't it like, I don't know if it was Riot Games or Steam or someone like that accepted Bitcoin. So one of those online gaming companies. But you cannot use Bitcoin right now as an actual currency, for the most part. And so it's not regulated. And as of right now, it's just the commodity. It's something that you're willing to buy just so you can sell it in the future in hopes that it goes up in value. That's what it is right now. It's not an actual currency that you can go out and use right now. And so I think, in my opinion, I'm worried for investors that are hearing all this news, hearing the 1,000% gains. Ethereum's up 3,000% or whatever this year. Bitcoin's up 150 or 300 or 500 or some ridiculous number. And everyone's just like, oh man, this is great. I can just throw in $100, then it'll turn into $500 by the end of the year. And that's not how it works. Most of the gains have already happened. Most of the gains have already happened. Now, sure, Bitcoin may shoot up over the next few years. It could go up dramatically. It could be the universal currency in the next 100 years. I don't really know. But from my perspective, it is such a risky investment. I mean, they get hacked all the time. You cannot access your assets all the time. Prices fluctuate. They can go from literally, $3,000 down to zero, or down to whatever was 19 cents, just because there was a fluctuation in the system. That happened a couple weeks ago to Ethereum. And so, are you willing to take those risks? Goldman Sachs they're looking at it as a commodity, as something to take a flyer on. So here's my opinion on this. I have the 80-20 rule, or the 70-30 rule, where you invest 70 to 80% of your money into safe stocks that are not going to go out of business in the next 20 years. All right, that's generally where you put your money to start off with, and then 20 to 30% in stuff where you take a flyer on. Whether it's a tech company, whether it's Bitcoin, whether it's Ethereum, whatever it is. You can take a flyer with 20 to 30% of your money in hopes that you get a big return on it. And so, for me, I wouldn't put 20 to 30% I wouldn't take a risk on Bitcoin and Ethereum. It's just not for me. It's too risky for me. However, if someone wants to use my investment strategy and invest 20 to 30% of their portfolio into that, go for it. Because it's had good returns so far. I don't know if it's going to maintain it. So Goldman thinks it does. Actually, Goldman stock was way up today after they announced this. But yeah, so that's my opinion on it. What do you guys think about that? Do you guys like Bitcoin right now? Do you like Ethereum? I thought I would talk about it today simply just because Goldman Sachs is super, super bullish on it right now. So anyways, that's some Bitcoin news. Leave your opinions down below in the comments. Anyways, we are going to move on to the next topic here, which is the Tesla 3. Elon Musk said on Friday that he would have a big announcement over the weekend, or an announcement, not a big one, over the weekend. And what was it? It was that Tesla Model 3 production begins on Friday, this Friday. It was expected to start in about 2 weeks, and so it's just starting 2 weeks earlier, which is good news for the company as a whole, for investors as a whole. However, it did not really affect their stock in a positive way. In fact, Tesla was down about 2.5% today. They were a big loser today, even though they announced good news today. It was good news today. So the Tesla Model 3 production, just some background on it. So Tesla's current cars out right now, they cost about $90,000, at least $90,000, and they're high-end. They're seen as luxury vehicles. They're electric cars. They're for rich people. Let's just come out and say it. They're for rich people. And so their Model 3 is their average to middle class, upper middle class consumer car, which is valued at about $35,000 per car. This is supposed to be their moneymaker. This is the thing that's going to make them profitable in the long run. And the fact that they're able to start this 2 weeks earlier than expected, that's good news. However, if you read a little bit deeper into this article and into the announcement, they're only really starting production on like a handful of cars on Friday. They're not producing 10,000 cars this month. They're not producing 10,000 cars next month. In fact, here are the numbers that are laid out. They're expected to produce, about 50 to 100 cars in July, probably even less than that. It might even be 5 or 10. And then they're expected to produce 100 cars in August, 1,500 in September, and 20,000 in December. And so what this announcement is it's confidence. It's not a big announcement for pumping out a bunch of cars. It's confidence saying that, look, for the first time in a while, Tesla hit one of its targets earlier than expected. And so the fact that they've announced all of those other production numbers, it gives the investors more confidence that they will hit those numbers. That's what this announcement does. It's not a giant, pumping out 10,000 cars this month. It's a confidence to investors saying, we will hit our numbers in the future, in the next few months. So that's what I take from this announcement. So what do you guys think about this? I think I'm really excited to see what happens with Tesla. So by the way, if they make 100 Model 3 cars, they're not selling those Model 3 cars right away. They're going to wait a little bit. And the other thing too is that the reason why production is going to ramp up and go from 100 cars to 1,500 to 20,000 is because they're still working on automating the entire process. And in fact, they said that the facility that they're making it in is just too small right now. It's too jam-packed, and they're going to probably need a bigger facility to make these cars. That's what this article said, actually. I don't know if I believe it or not. But that's the big announcement from Tesla today. So what do you guys think about that? Are you bullish on Tesla? Are you bearish on Tesla? Are you going to buy one of these cars? I think it could be, it's a little bit too small for me, these cars. I need a little bit of a bigger car, like an SUV. I need to carry around lots of stuff, lots of equipment. So I'm probably not going to buy it, but what do you guys think? Do you think it's going to be a big hit? I think it could be. It could be a big hit, especially as we see more of those electric, Tesla fueling stations. Actually, there's one that's just across the street from me right now. Just opened up this year, and I'm really excited to see what happens. I think it's good for the environment. I'm always positive about Tesla. I hope that they succeed, and we'll see what happens. So we're going to move on to the next topic here, which is oil prices. Remember how a few weeks ago everyone was saying, oh, oil's tanking, this is the renewable energy thing, and I was saying, like, look, oil's going to rebound. This is the time to buy oil. I was looking at oil stocks the past few weeks. You guys know that. I've been on record saying this pretty much every single day. And, what do you think happens? We've had the biggest, over the past 9 trading days, it's been the biggest positive oil price streak since 2012 in about 5 years. And this is just what happens with oil, guys. As soon as everyone gets really down on oil rebounds. This is how it's been historically. Now, over the course of the next few decades, it might slowly, as a trend, plateau or go down a little bit instead of going up. But it's cyclical. It's cyclical, guys. So for all of you that listened to me, 3 weeks ago saying, or go back even a little bit before that, even 4 or 5, 6 weeks ago when tech was booming and oil prices were tanking, I was saying, look, don't buy tech and buy some oil right now. And what do you know? You would have had a nice return if you did that. So what do you guys think about oil? I don't know if this is going to maintain this 9-day streak. Today's actually, I forgot to mention this, today's an early trading day, an early closing day, because it's the day before Independence Day in the United States. So stock markets close at about 1 o'clock today. And I think actually Canada's TSX is actually closed today as a whole. I'm not 100% sure on that. I should actually check that out. But because Canada Day was on Saturday, we have the day off today. I don't have a day off today. I keep working on days off. Meanwhile, all the shops are closed. All retail locations are closed today for Canada. So stock market, yeah, it was closed a little bit early today. So I don't really know if this trend is going to continue for oil. I don't know, but from historically speaking, it's cyclical. It might be on its way up. All the articles are saying it's going to hit $40 a barrel. It's going to keep going down. It's at $47 right now. It's going to keep going down. I don't really know. I don't know, but I was bullish on oil a few weeks ago and then it rebounded. Now I don't really know. Now that it's going into the mainstream that oil is doing great, now I don't know if I would buy it. See, this is how you should be as an investor. You should be going the opposite way of the stream. When everyone's really down on something, go the opposite way. I was investing in financials 3 weeks ago when everyone was down on them. What's had the best week in this entire year? What's had one of the best weeks ever this year? It's financials. It's just, this is how it works. When everyone's really down on one sector, you got to invest in it. When everyone's really bullish on one sector, go against it. That's usually what happens. Now, that's just if you're buying, if you want a short-term like 2% return. So, for example, how I invest is like if a sector is down 2% in one day, like tech has been a lot recently, I think that's a good time to invest. That's a good time to invest. You're getting a discount essentially just because everyone's a little bit bearish for one day. So now might be a good time to invest in tech. Tech's been hit hard over the past 2 weeks. Now, if you have 20 to 30% of a portfolio that you want to risk in tech, now's the time I would say to do it. Now's the time where I would recommend it. I mean, we're going to get to some of the stock market losers. They were all tech stocks again today. We've been seeing that over the past few weeks. So anyways, we're going to move on to the next topic here. That was my opinion on tech and oil. We're going to move on to some big retail news. It's not big news. It's just there was a study that came out that said retail foot traffic. So the amount of traffic that actually goes into retail stores, malls, things along those lines, down 12% in the past 2 years and down 9% this year alone. People aren't going to retail stores anymore. The next topic we're going to talk about is going to talk a little bit about that. But down 9% this year. Why? Because Amazon. All that's going to Amazon. All that's going to online. People don't want to go to stores to shop anymore. It's a waste of time. People want to have stuff delivered to their door. That's the way the world's going. And so there's actually an article that came out, CNBC. A former department store executive says the worst might yet be to come for retail stores, and I agree. Retail. Now, actually, here's an analogy I ask you guys, so leave a comment if you guys agree with me on this. There are two ways that retail stores are going to go. There's going to be two types of retail stores that happen. So I'll give the analogy here. The first type is like, remember rental movies and rental video games? Those were really big. And in Canada, we had two types of those stores. We had Blockbuster and we had Rogers Video. We had two kinds of those rental stores. You go in, you rent I remember, you'd rent a movie for 5 to 7 days. It would cost $5 to $7 to $10, depending on how hot of a thing it was, release it was, then you return it. And I actually miss those. I miss renting games. For all of you millennials out there, you guys have no idea how cheap it was to beat a campaign and then bring it back to the store. You could literally play an entire game for like $7. It was unbelievable those days. And I really miss those actually. So anyways, there's two types of stores. So will retail be going the way of Blockbuster? The type of store that did not adapt. The type of store that lived and died by its current business model. Blockbuster was just pure, they didn't go online, they were purely a rental company. They all went out of business. Rogers Video, sure, they were half a telecommunications company, but they were also a video store. They had bricks and mortar and they were online. Bricks and mortar and telecom. And so what did they do? They turned their bricks and mortar, they closed a lot of them down early on in order to focus more on the online part, and they also converted a lot of them into actual stuff that has to do, like an Apple store, selling their own products, like making their own phone or getting people on phone plans, selling phones, selling stuff that people need to go into a store for. So that's what they did. They switched their business model. They focused more on online and internet services, cloud services, software, not software actually, but internet stuff. They focused on that. Like they went from, probably 60% internet and 40% bricks and mortar to 99% internet and stuff like that to 1% bricks and mortar stuff. Blockbuster just didn't make a transition whatsoever and they died. So that's what's going to happen with retail coming up. That's what we're seeing. People aren't going into retail stores. The retail stores aren't adapting for the most part. And retail stores are either going to die or they're going to transition. So we're going to see what happens. I'm really interested. So that's actually the next thing I want to talk about actually is, remember how, I think it was on Friday or Thursday, somewhere around there, Nike partnered with Amazon. They're going to start selling stuff online through Amazon. So the Nike stock shot way up, 10% in one day, 12% in one day. And they're adapting. They're going to shut down a lot of their bricks and mortar locations, those Nike factory stores, and they're going online. That's what they're doing, and that's a smart strategy. They are adapting, so they're going to be fine into the future, most likely, if they continue this trend. And so Microsoft is going along the same lines. So an insider said that they will be laying off thousands of people in stores and in bricks and mortar locations, just so that they can focus more on cloud services and Azure Tech, or Azure. Is that what they're calling their cloud services? Azure, Microsoft Azure. That's what they're doing. They are restructuring so they can survive and be more profitable into the future and maintain their company. Be one of the biggest companies in the world and maintain that. And so that's what they're doing. Microsoft's going to be fine, but it was just a big announcement today. This is the world we're seeing. Less bricks and mortar, less in-store, in-person shopping, more online stuff, more cloud services, more delivery stuff. And Microsoft has announced that they're doing that today. They're making that transition. So big news from Microsoft. Now I want to cover stock market winners and losers, and then we will close this video out. So again, I just want to mention that this trading day was about 3.5 hours shorter than normal, about 3 to 4 hours shorter than normal. I think that the market closed somewhere around 1 o'clock today. And all of these stock market winners and losers, they're essentially, it all happened over the course of about 3.5 hours. And so anyways, we're going to get to this here. So our biggest loser today, or one of our biggest losers today, is Nvidia again. Again, Nvidia gets kicked in the crapper. So they have had some really big losses actually in the past week or past 2 weeks actually. When everyone was so bullish on them, Nvidia is going to be this giant company, is that the stock's going to go and hit 200. Well, on June 21st, they had a price of $159.47, and now they are down 12.6% over the past 2 weeks. And the stock is valued currently at $139. That's where they closed out today per share. So they had a bad day today. They were down 3.62% today. What do you guys think of Nvidia? I mean, they're just how tech's going. This is what tech's going. Everyone realized that they were overvalued, and now tech's tanking. And what do you know? what do you know? Nvidia was the tech darling over the past year, and now people are coming to terms with, oh yeah, they were overvalued. Okay, so we're going to move on here to the next one. Next loser was another tech company, Symantec. That's what I've heard of them before, but they were just a big loser today. So they were down 2.76%. They're just a tech company. They're essentially another Silicon Valley company. They've had a bad 3 months actually. They've had a good year as a whole, but in the past, since May 10th actually, they're down 17%. They're down 2.7% today alone. Oh, Advanced Micro Devices. Oh, someone placed $1 million bet on them a few days ago, and they have been kicked in the keister. This was on a Wall Street Bets. Go check out that subreddit. It's really funny. See what happens. They only talk about investing in tech. That's all they talk about. Biotech, pharmaceuticals, tech. That's all. That's it. And guess what? They've been losing a lot in the past month. Now, sure, they've won a lot in the past year, but they're all losing tons of money. If you're just jumping into the tech sector, you're losing money over the past month. So, Advanced Micro Devices. On June 22nd, they were at $14 a share. Now they're down 15%. They're at $12 a share. And in the past day, they were down 2.6%. That's pretty big. That's a big loss today. The winners today was essentially everyone that wasn't in the tech. Actually, you know what? We'll just touch on the big tech stocks because you guys like to hear about them actually. So the big tech stocks today, Amazon down 1.48%. That sucks. Google down 1.1%. That sucks. Tesla down, I mentioned them, down 2.5%. Apple down 0.36%. Nvidia, I mentioned them. Facebook down 1.69%. Netflix down 2.17%. And Twitter down to 1.23%. So those are the big tech stocks. They were all down today. Really, really sucks. So anyways, the winners today. Big winners were financials and oil. That's what I've been investing in the past few weeks. So Goldman Sachs, they were up 2.42% today. So they've had over the past 5 days, they've had a gain of roughly 3.1%, which is pretty good. They've had some really good days. In the past month, they've been up 6.21%. So financials as a whole, the past few weeks, as I've been saying, they've been doing very, very well. Goldman Sachs has been doing well. Oil companies did very well today. So Baker and Hughes, which is just a giant oil company, $25 billion market cap, they're up 5.8% today. 5.8% today alone, which is a big, massive gain today. Transocean, they're just an offshore drilling company. They're up 5.3% today. Again, another big oil company up. Probably the biggest winner today were those three stocks. I think that those were the big three I wanted to mention today, just because as a whole, I could talk about all the oil companies, all the financial companies, they were up today, but those were the biggest gainers in my mind. So anyways, I think that's going to wrap this video up. How did you guys do today? And how did you guys do? Actually, how have you guys done in the past few weeks? Have you been betting on tech, or have you guys been betting on more of like oil and financials, like I've been saying? And now, are you worried that those are going to go down? Because now that financials and tech have had or financials and oil have had a good week, 2 weeks now, I don't know if I'd invested them if they're at a high. Now I'd be putting some more money into tech potentially. I mean, Google's down about $100 off its peak. I might be looking into that actually. I might take a good hard look into tech companies this week. So anyways, I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you. Oh yeah, actually remember, like and subscribe this video. It helps me out a lot if you like and subscribe and share this on iTunes and stuff. Leave a review. It does help me out a lot. The podcast, quick want to mention this, has been taking off recently. I don't know what happened. I don't know if I got onto some sort of top chart somewhere, but I think about 4, 5, 6 days ago, like, the amount of downloads like tripled in one day, and they've been fairly maintaining that. So thank you very much for listening in the podcast version. Leave a like, review, all that stuff. It helps me out a lot. So anyways, yeah, thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.